Hello, everybody. This is Andrew Hunzicker with DOPE CFO, and today we're going to talk about the exciting subject of how much it costs to grow a pound of weed. That's kind of an interesting topic to some. I always get a kick out of asking cannabis CEOs how much it costs to grow a pound of weed, and they usually give me a very definitive answer, like $430 a pound or $800 a pound. And it usually goes downhill from there because I ask them how they come up with a number. And of course, you need to do cost accounting to get that number, which 99% of cannabis companies have no idea how to do. And so they have all kinds of odd ways they calculate their cost accounting. But as you can imagine, this is a super important topic to a cannabis CEO for many reasons. If you're growing pot, your biggest cost is your inventory. And if you don't know how much it costs to grow a pound of weed, it's going to be very hard to manage your business. It's also going to be hard to do correct cost accounting to minimize your taxes, as well as being around for investors and lenders. Before I jump into the actual details, I printed out a bunch of stuff here to go through. Why is cost accounting related to a cannabis company? The quick backdrop, 280E relates to anyone trafficking a Schedule I drug on the tax code. It says you cannot deduct anything on your tax return. It does allow, however, cost of goods sold because that's not a deduction or a credit. It's a actual part of the definition of taxable income. And so that's good news for the cannabis company because you can deduct cost of goods sold, but to do that, you need to do cost accounting. The other important thing, which we'll go through in 471-11, is if you do GAAP cost accounting in your recurring normal monthly, quarterly financials, you can also get even more cost into the cost of good category, meaning your taxable income will be lower, meaning your taxes will be lower. That interests almost all CEOs as well. Seeing a lot of people jump in. Hello, everybody. I actually was just on a call with my wife, and I told her what I was talking about. She said she was going to decline to join in, and I was kidding around with her. I asked her, she's growing rose bushes in our front yard. I said, how much does it cost you to grow a rose bush? And she's like, nothing. I bought, some plants or seeds, put them in the ground. For the most part, we do have sprinklers, but the rain takes care of them. She trims them a little bit. And so, yeah, some plants you could almost look at, they don't cost anything if you don't have to tend to them. In a cannabis grow operation, that's not the case. You may have hundreds or thousands of plants in your facility, and they take a lot of care over their life cycle. And so really, what is that? The interesting thing when we talk about cost, and as we get into this, what it costs, the raw materials. So when you make many things, cars, ladders, furniture, raw materials are your biggest cost. And then on top of that, direct labor is a huge cost. But in cannabis, raw materials are often free. So many of these indoor and outdoor grows, they use clones off mother plants, and they can use those, just clip a leaf, plant it, and effectively the raw material cost is zero. And so you'll often find on the balance sheet of a cannabis operation, the raw material component will be zero or very small. Sometimes they buy seeds that are a little bit higher dollar, and if they're material, they can put them on the balance sheet, or if not, they can just expense them. But so as we get into this, the cost discussion, just remember that a huge chunk of the cost is going to be in work in process. And so I'm going to real quickly hit on the life cycle of a plant. So you have somebody cut a clone. First of all, someone's taking care of those plants to clip the clones. That takes time and care and labor. Then they plant them, and depending on different growers' kind of recipe, they can they can do many, many different types of things as they grow a plant. They can make them humongous. They can keep them small. They can have 200-day cycles from start to finish. They can have 80-day cycles. And so each grow is different, and maybe they have different cycles within one company. And so one of the first things we do with a client is understand, and we actually build a flower calendar. We try to understand what is their cycle. So for example, I'm looking at one where they plant, then they veg the plant for 10 to 14 days, and then they start day one of the flower cycle. This grower goes 60 to 65 days. After that, harvest 1 to 2 days, then dry room 10 to 14 days, trim 2 to 3 days, cure 14 to 21 days, weigh, tag, metric 1 day, testing at the lab 5 to 7 days, and then finally they're ready for sale. This cycle for this client's 130 days. And so that's very important to know that, because that's going to, whatever reporting period you're on, whether you're at March 30th or June 30th, or what day in that growth cycle you are, is important to determine percent completion. And so that is something you get on day one, working with the grower, and then you test that over time, because that may be their theory. They want to be on 130 days, but maybe they get slowed up in the flowering cycle, or at the lab is delayed and they don't get their testing back for 2 weeks. Their full cycle may go to 150 days. And so over time, they can get that fine-tuned much better over time. Let me see. So, hello. I want to make sure I hit any questions. It looks like it's mostly hello. Someone ding me if I got any questions. So before we jump into more to the operational data, just so be aware, that's kind of the overall cycle. So since it takes so long, and I've seen cycles up to 180 days, that's 6 months. And so what kind of costs? So we started out with this raw material that's maybe free. We put it in a pot, but by the time we go through all that growing and moving and replanting and trimming and lab testing, what are all the costs that are going to be added into that plant over the next 180 days until where it's ready to sell? And so also remember, as you get to so at any reporting period within that 180 days, you're going to have WIP on that plant of various costs on that plant. So if you say you plant the clone on January 1st and you're looking at the March 31 period and it's a 180-day cycle, that plant's going to be 50% complete, and it's all going to be in WIP. Now say once you get to full day 180, that plant's ready for sale. It's now finished goods. You will have finished goods on your balance sheet, but normally in normal cycles, these growers want to get rid of the finished goods quickly, so they have deals already set up with distributors and dispensaries to get that offhand quickly. There is a shelf life with cannabis, and so they want to move it quickly. So usually you'll have limited amount of finished goods, and most of your balance sheet will be WIP, because you'll have a whole bunch of plants in various stages of the growth cycle. So now let's kind of back up. So okay, you're growing a plant. It's going to take a bunch of time. It's probably going to show up mostly as WIP while it's growing on the balance sheet. What kind of costs are you going to put into that plant? And so luckily for both GAAP accounting and 47111 tax accounting, you can pretty much use the same absorption costing method. It works for both, which is very good. If you have a good system, chart of accounts, grow and operational data templates, cost accounting templates, if you have those systems, you can easily do this, and it'll be ready for both GAAP and tax, which adds a lot of value to the CEO. So the code section in 471 that deals with the costs that you can put on a plant is 47111. It's for cultivators, manufacturers, and processors. And I will just read through, or not, I won't read it, but I will go through. It's very, very detailed. You can Google it, and it will tell you exactly what you can and cannot do. It does say use of full absorption method is required. And In this method, inventory costing production costs must be allocated to goods produced during the taxable year, whether sold during the taxable year, or in identifying goods in inventory. So the costs that you're going to be including are direct production costs, indirect production costs, and that will include a lot of direct labor and indirect labor. So in general, production costs, they are considered to be production costs to the extent that they're incident to and necessary for production or manufacturing. So you will find a lot of CEOs try to be extraordinarily creative with that clause, and they will, they may come up and say that advertising is necessary for production and manufacturing. That won't fly with the IRS. So you need to, that's the kind of high level definition that you have to meet overall as you get into this. Now, direct production costs are generally those which are incident and necessary to for production, and the biggies of those are going to be direct materials, direct labor. Let me see what else they list in here. And the elements of direct labor. Okay, which is going to include compensation, overtime pay, payroll taxes, and that kind of thing. Also, direct materials, which could be soil, nutrients, pots, any other kind of direct materials, even the water coming in. And so the first and foremost is you're going to allocate 100% of direct materials and direct labor. So that's those costs, as you pool them and collect them over time, those are all going to be going into the inventory. Where it gets a little bit trickier is indirect production costs. And so these are all costs which are incident to and necessary for production, and also classified under fixed and variable. And so they actually have 3 different types of classification in the indirect costs. And the way the 3 categories work is the first category are things you definitely need to put into inventory. The second category is things in 47111 that you cannot put into inventory, and they're pretty specific. And then the third category are things you can put into inventory if you are also putting them, doing GAAP financials for your applicable financial statements. So the financials that are reviewed by management, owners, lenders, investors. So that's category 3. Those costs can be significant. They can significantly lower taxable income and save the CEO money. So we stress to the CEOs, it's very important for you to be doing GAAP accounting in your normal financials if you want to save as much as you can. And so the first category that you're going to include no matter what are things that are clearly manufacturing related. Repairs, maintenance, utilities, such as heat, power, and light. And by the way, these can be huge costs in a grow. You have these big farms and indoor grow facilities. Lighting can be just an absolute massive bill. Rent is a huge one. So you may have a farm that's got 80% of the farm is a big grow facility. That means 80% of the rent you're going to be able to put right into inventory. Also, indirect labor, production supervisory wages, compensation overtime, indirect materials and supplies, tools and equipment not capitalized, and this can be high too. When we were out at the farm, we had guys going to Home Depot daily and the grow store, just getting all kinds of stuff, ladders, nutrients, small tools. Those can be lumped into this category. Quality control and inspection, again, big cost in cannabis. So that's a pretty good list of costs right there that you will put into inventory. The second group of costs is things you will not put into inventory. And even though it's clearly spelled out, we still find CEOs and even tax or legal advisors trying to get them to put these things into inventory. Includes marketing, advertising, selling, other distribution expenses, R&D expenses, losses under Section 165, percentage depletion in excess of cost depletion, depreciation for federal income tax in excess of basically GAAP depreciation. So in other words, you can't use accelerated depreciation. G&A expenses incident to and necessary for the taxpayer's activity, salaries to officers. So a pretty long list of things that you cannot put into inventory or cost of goods sold. And then finally, you have a category that you can put in if you're going to be doing GAAP financials. And so this will minimize taxes. So this category 3, if they're doing GAAP on the recurring financials, you can also deduct some taxes. You can deduct depreciation, depletion on the growth facility, employee benefits. This 4th category is a big one, costs attributable to strikes, rework labor, and scrap and spoilage. That can often be a big number. Factory admin expenses, so on the factory, that can be big. Officer salary related to production and manufacturing, insurance costs. So that's a pretty good list of costs that you can put into to inventory if you're doing the GAAP. So one of the first things you're going to do with your client is hopefully you have a correct chart of accounts set up for a cultivation, and then you'll walk through those chart of accounts and you will highlight which category each one of those 3 costs are on your books. Okay, I'm getting a question. What are the average cost per pound for indoor growers? Again, this is a very interesting question. It can be anywhere. So imagine you pool all these costs together at a big indoor facility. And you got this, and I can think, so out at our farm in month 1, we've only got 10 plants in this huge barn, but we've got $400,000 of labor. So what's our cost per plant if we have 10 plants? We've sold nothing, it's all in WIP. We've got 400 grand of all these costs I can put into inventory, but we've only got 10 plants, and they each yield 1 pound. Well, that'd be a $40,000 pound. A pot. And so you can see the more plants you grow and the more cycles you can get in while keeping your relative costs similar, your rent, your utilities, most of those things staying level. As you grow more plants, even at that same farm, your costs will drastically reduce. And so we're often finding costs from anywhere from $800 to $1,200 a pound on indoor and outdoor grow if they're doing cost accounting correctly. You can get that down, but you really have to have everything nailed down completely, and it really depends on how they're doing things. Some people have really quick cycles, and some people have much longer cycles, which means you have more costs in the inventory. So next, I want to cover, so we've covered kind of what costs you can put into inventory and cost of goods sold. You identify them on your chart of accounts. You get to a period end, and what is the next step? Well, you're going to have to allocate, figure out, okay, we've been going along all quarter 1, let's pretend we're at March 31st, and we're allocating or we're accumulating cost, power bills, labor, payroll, soil, all these different costs. We're accumulating them in our chart of accounts. Now we need to allocate them. So now you need to do a few more steps. One step is, and you can do this once or twice or 3 times a year, you need to go down that chart of accounts line by line and figure out what method you're going to allocate each item with. So for example, you'll have many things that you'll use square footage. So for an example, things like utilities, rent, garbage, telephone expense, depreciation building, you're going to look at square footage. So you may only have to do this once a year. You go out and you measure the barn, and whatever, it's 800 square feet and the whole property is 1,000 square feet and the admin space is 20%. And so you can go through and allocate, and you need to do it with actual numbers, and you want to have this documented in your work papers. So if the IRS shows up to audit, you've got good, reasonable support. And so for costs that might relate to square footage, you're going to use a square footage allocation. And so on this example, let's just say rent, That's one of those costs. We're going to always allocate 80% of rent into inventory and cost of goods sold into that scenario. And then we go up and look at labor costs. We may have direct laborers. All they do is they work in the garden. They all their day. So all of their payroll, their benefits, their taxes, all of that's going to be allocated into inventory. Same for trimmers, farm and plant staff, purchasing and handling. That can all be 100%. But then we come down to, say, the indirect supervisor, manager. Maybe we're going to only allocate 60% of his time. Again, you want to have basis for doing this. Have him track his time on it. There's lots of phone apps that they can do this with. Maybe you have someone who spends 3/4 of their day working in the farm, and then they go in and pay bills and do admin stuff for 25%. They can track that time, and that's how you'll allocate it. And so you go through and do that exercise once a quarter, at least 2-3 times a year, to make sure, because it will change over time. Workers will come and go. You may add a new barn, so now your square footage allocation changes. And so you got to update that every once in a while. So at this point, you kind of identified your 3 categories. You know which cost goes where. You know how you're going to allocate them. And then during the first quarter, you're just adding cost into those categories. Now you get to quarter end and you're ready to do some cost accounting. What other data do you need? Well, now we go back to this flower calendar, and this is what we have. We help the client build this, and they track the spreadsheet. And basically, it's a long spreadsheet that starts with each room or barn or greenhouse. We usually have one for each one, so maybe they have 8 greenhouses. And in each greenhouse, they have 4 strains. So we'll put each row, there will be 1 strain in 1 room or 1 barn or whatever. And then on that row, you'll have a plant date. Maybe it's February 14th for some plants, January 3rd, February 28th. Maybe you planted some yesterday on March 30th, and here we are March 30th. So you have to go through every plant on the facility. They've all got to be counted. This is kind of outside of cost accounting, but you want to count and reconcile these numbers back to the seed to sale system to make sure that's accurate, because that's required for most states reporting. So you want to make sure you do all that, and that you have good count supporting documents that they actually went out and counted in the field, and good evidence of that. So say in room 1, you've got Lemon Kush and Electric Punch, different strains at different points in time. So say the one that was planted yesterday, it's not even 1% complete. And so there's going to be very little cost allocated to that plant. Maybe you've got plants that are also 99% complete. They're not quite complete, but they're almost full grown. So you literally walk down strain by strain. If you're at March 31st, you just have to calculate how many days. So if the cycle is 180 days and you're on day 90, at March 31, a plant that was planted on January 1 is going to be 50% complete. A plant that's planted again on March 30th is 1% complete. A plant that's planted on February 15th is 25% complete. So you'll have all these different completions. So you figure out how many plants you have, what percent complete they are by strain, tied to count. And then the next piece of data you have to know, again, this is from your client, what average yield per plant. Some people will have 1 pound per plant. I've seen 1/2 pound per plant. Some people think they can get 2 pounds out of a plant. Again, they can be more optimistic. Over time, you can test this flower calendar back to, again, the full cycle time. You can test that, and you can also test average yield as they actually grow plants and produce them. You can see what they really get, and so you can really true these numbers up over time. It may take a year or 2 to really get this data. And by the way, this flower calendar is hugely useful to owners, management, investors, the board. They love to see this because they can just scroll through and quickly see where we are on each strain, what's coming on, what's about to be ready to be sold. It can be used to move into forward-looking cash forecasts because you can predict when these plants will be ready for sale, when the cash will walk in the door. So very, very useful to CEOs and investors. And so it's useful for them to get this data right. You know, some of our students say, oh, it's hard to get them to help us create this. Once this is created and we can help them initially, it's kind of like a rolling thing that they update every week, and it's easy to maintain. And yes, it's a little bit tricky at first, but they should want this. This gives them real-time data about actually what is going on their farm in a really good snapshot. And so, yeah, they want to know this so they can manage their stuff. And even like they may tell their board of directors, we're going to grow 1.5 pounds a pop per plant, and they may come back 8 months later and realize they're only getting a pound per plant, and that's a huge impact on their forward cash flow for investors and lenders. So once you so let's just look at one plant. Say this one plant is 50% complete, and it's going to yield 1 pound. So that means since it's 50% complete, we're going to say 0.5 pound is in inventory at March 31. When we get out to June 30th, we'll have a full pound in inventory if it's not already cut down in finished goods. And so if you have 100 plants and in that strain, and they're all 50% complete, and they all are expecting to yield 1 pound, that's 100 pounds at full completion. So we're going to have 50 pounds of WIP inventory. So we go through this row by row by row until we come up with a grand total number from WIP of all of our plants. Whether we have 10,000 or 300, we'll get a total number, and we'll get it in quantities, in weights. This has nothing to do with dollars. So everything in this spreadsheet is tying to plants and pounds and weight and percent completion. So once you get that, you will come up with a total number of pounds, and say it's 500 pounds of WIP flowering plants. And then maybe you go into the finished goods, that you actually do have some finished goods. It's been dried and tested. It's in the vault, and you weigh it out, and it's another 20 pounds. So you got 500 pounds of WIP, 20 pounds of finished goods. And then the final quantity you need, you say how much pot did you sell this quarter to get, so you can figure out how much to put into cost of goods sold. So if you sold 50 pounds that quarter, that tells you the total amount of volume between how you allocate between cost of goods sold and inventory. So we've allocated the costs, this big pool of costs in our GL and chart of accounts. We figured out how we're going to allocate them. And then we got this pool of costs. The next question is, and we've done this client grow template to figure out pounds of WIP, finished goods, and sales. And so we're going to use those relative quantities to figure out how much of that cost pool to put into WIP, how much of it to put into finished goods, and how much of it to put into sales. So say at March 31, that cost pool is $1 million. That's probably too high. Let's say it's 300,000. And that includes utilities, labor, and rent, and all these other things. That 300 grand is going to be allocated based on those square footage things, and then based relative to these quantities. So if sales is 25% of that total, 25% of that 300 grand or 75,000 is going to be put to cost of goods sold. That's the cost of goods sold number. The rest of it's going to hit the balance sheet and be split between WIP and finished goods. And so it's a little bit complicated. Where do I have an example here? Make sure I'm not getting a million questions. I'm seeing a lot of questions. Let me finish up my example, and then I'll hit all these questions. So for example, let's just look at one category of cost, rent. If rent's $1,000, but we're going to say 80% of that rent is related to the grow facility and cost of goods sold and inventory, and 20% is admin, we are going to allocate $800 at quarter end into inventory, sales, and cost of goods sold. So if we say, okay, now we did all that other work and we came up with that sales was 25% of the total poundage between sales, WIP, and finished goods. So 25% of 800 or 200 is going to go to cost of goods sold from just the rent piece. And then the other $600 of rent is going to be put into WIP and finished goods. Now, if you don't have a good system to do this, I'll tell you what's going to happen. And I did this way back when. At first, you'll start making actual journal entries, which is a nightmare. First of all, it takes a ton of time. Lowering rent, moving some of it to cost of goods sold, moving it some to WIP, some to finished goods. And then you go to give your P&L to the owner, and he's like, why does it say rent is $200? I know I paid $1,000. And it comes up with some very hard to read financials. And so if you have a better system, you still want to be able to show rent on the P&L at its normal cost, $1,000 a month, and then you want to be able to show a cost of good or a cost accounting allocation separately that moves stuff up separately. So that is kind of in a nutshell. Normally this talk would be accompanied with, I would be doing screen share and we would be looking at all these different things because this is very hard just to do with no visuals. But I think you can get that it's not easy. You definitely need grow data. You need to know how to allocate every single cost based on these 3 categories. You need to know how to do GAAP cost accounting. You need to know all the different strains and locations, inventory counts. You need to know yields, what their cycle time is, what the WIP is, what percent completion, great chart of accounts, cost accounting templates. So if you have the tools and the knowledge and the systems, it's not that hard, and your clients will love you. They will know what it costs to grow a pound of weed. And oh, by the way, the answer to that question, what does it cost? So you can take that total poundage, whether it's in inventory or whether it's been sold, over all the costs, say it's $1 million, and you either got 300 pounds in WIP and 100 pounds sold, so you've allocated 400 pounds of cost to that $1 million, and maybe it's, I mean, that's too high, but maybe it's $1,000 a pound, so you can actually know what it costs to grow a pound of weed. Now, as you grow more plant, the more plants you can, and quicker cycle times, the lower that cost will go. Okay. So Karen is asking, are you reading off the information the state's provided? So no, Karen. So what we are doing is federally. So that's also good news. So GAAP is national. So for our books and records, we want to have GAAP financials for many reasons. You can better access capital, whether it's lenders, investors. If you ever want to go public someday, even after 280E's off, that's all higher value to have GAAP financials, or you want to do an exit. Also, GAAP financials are better for management, just to run the company. The board usually wants to see GAAP financials. Those are done nationally. Doesn't matter what the Oregon rules are, California rules, nothing to do with GAAP accounting. Same for IRS, that is national. So federal tax return, you do it the same whether you're in Kansas or Oregon. So that's what we're showing as well, 471 dash, and Joe's asking which document are you referring to. So in this call, I've just been looking at 471.11. You can Google IRC 471 and read the entire code, and that will go into valuations. You also have other issues like lower of cost, valuing your inventory at lower cost or market. That's very relevant in grows now, because sometimes cost is higher than market and you have to write down your inventory. That write down is not a cost of goods sold. So that's very important to note. But for Karen, for state information, you need to go to each state. For example, here in Oregon, we've got like an 80-page rule book. 90% of the Oregon rules have nothing to do with accounting. They're around your facility, how tall your fences are, and lux and all that kind of stuff. Around financials, it's more you need financial records and statements and good accounting practices, those kind of things. Okay, Corey is saying, do non-deductible expenses decrease a shareholder's basis? Those expenses would be deductible for so there is, so basis is going to be, I'm going to have to pass on that question around how that is actually affected. This is a really complex topic, and also all this new laws around Section 199A and how that does affect basis if you're not getting the deductions. I believe it would well, I'm going to hold on that question. So that is a complicated question. So that's less related to this topic of what it costs to grow a pound of pot, but actually how you account for individual taxes. It's a great point though, because many investors and owners in cannabis companies around the US. These people are worth $1 to $10 million. Oftentimes they have very complex tax situations. So we're finding all types. A guy owns a construction company. He's got 3 other LLCs, and then now he's got 4 cannabis investments. And so it gets really complicated around the 199A laws. And so again, this is why they need us. But just at the base level, they need really rock solid GAAP financials and base level tax financials. Piper says, how many times per year do you visit your grow clients? So in our program, Piper, and I know you're part, the answer would be 0. We try to work remote. We feel that visiting our client in person is time consuming. We don't need to do it. We make sure we put in place systems and processes so we can do everything remote. We will have video meetings on Zoom. Now that said, if you're new in the industry, yeah, I've definitely visited the farms or whatever. I may go out there or ones nearby, but the good thing about this niche, you could have 80% of your clients in a different state. So if they're in a different state, you're probably never going to visit them. If they're down the street, yeah, you'll probably go see them. We encourage people to have some clients nearby, but have some also in other states. So no, Corey, 280E. So 280E is very clear. It's one sentence, and it says you get no deductions and you get no credits on your tax return. So now when you talk about hemp CBD, it's now federally legal. 280E doesn't apply. Yes, they can do farm accounting under there is a whole different farm supplement. They can do 263A. They can do all kinds of things. But under 280E, you can't do anything except 471. That is where you're limited. Cherie, this will be recorded, so you don't have to, if you missed something earlier, because yeah, I know I started right at the beginning. What's the best IRS code to identify the entity on the return? Most of these are under, I think, and I don't have the codes in front of me, producers or manufacturers. They could, I think there's a farming code as well, but I think most of these are producers or manufacturers, and that you get the best cost accounting benefit into that. What accounting system would you recommend to use? So for accounting, most of these companies are going to be on Xero, QuickBooks, or Accounting Suite. We recommend Accounting Suite because it is cannabis friendly. QuickBooks is not. It's hard to use. Their support's terrible. So I'm definitely not versus QuickBooks. We always make the client own the system, whatever the system is. Sometimes they pick it, sometimes we pick it. As far as cost accounting, there is no cannabis cost accounting. So which one would I recommend? Ours. We have the only one I know about that includes chart of accounts, client grow templates, all the cost accounting data, and the cost accounting work papers. We have it built out in DOPE CFO. And by the way, if anyone wants to message me and learn more about our program, hop on a call and just shoot me a PM, and we will get back to you or post the answer here as well. You're going to find the replay right here on our page. Trying to think. I think I've hit most of the questions. And again, just if you would like to learn more about this industry, someone, I can't remember this group or another group, asked yesterday about they're trying to figure out a great niche. We have more information about if you are trying to build a firm and you want to pick a niche. There's definitely good niches and bad niches. Cannabis and hemp CBD are far and away the best niche in the US right now for a variety of reasons. A big biggie is it's massively underserved by accountants and CPAs. They will all be here soon in the next couple of years, so you can get a head start. The average revenues of a mom and pop dispensary or whatever are high. So one example, I have a student, and this is not everybody, but she sent me a message yesterday, and she looks like landed her first client. It was the very first. She joined our system, was learning all our VIP stuff. She sent her first email out and landed a client at a single dispensary. It looks like it's going to be 10 grand a month fee for her first client off one email. That's amazing. And guess what? She got to tell the CEO, this dispensary is doing 7 million. It's a big dispensary. Their controller had completely wrecked the books. They were paying someone 160 grand a year and benefits, so about 200 grand in dollars for nothing. They're doing cannabis accounting all wrong. This student of ours is going to make 120 grand. They saved their client $80,000 on day one. $80,000. And so it's just a great niche to get into. Hemp and CBD exploded out of nowhere as a secondary niche. Pretty much everything we just talked about, all our work papers, work exactly the same for hemp and CBD. Wildcats, if I'm not a CPA yet, what can I do to help clients where they feel comfy about me working on the goods? Again, education. That's our only asset we have. You don't have to be a CPA to do anything in our program. We have tons of bookkeepers in our program that are doing this stuff. We have many things, about 20 things we do for a cannabis CEO in our program. The hardest thing we do is what I've talked about today, and even a bookkeeper who's trained correctly can do this. You don't have to be a CPA. As a matter of fact, there is a testimonial from a CEO on our website who he called me for a recommendation. He had been through 4 different bookkeepers and accountants, including the CPA. He hired one of our bookkeepers. This was about a year ago, and he sent us a testimonial that he was just blown away by how well this bookkeeper was taking care of their books. So you do not have to have a CPA, but you do have to have education. Naomi and I are big believers in that. We both got our CPA. We've taken all kinds of courses and had mentors and paid coaches. So we do this ourselves. We practice what we preach. But when my niece asked me what's great about accounting and going into business for herself for this niche, and she was getting an accounting degree, I said, look, you can have a laptop computer, a few apps that most of us have already, like Dropbox, Google Drive, Excel, Zoom, Facebook, LinkedIn. You just need a few apps, your laptop computer, and education, and you can build a 6-figure cannabis firm very quickly. You don't need 100 clients. We have plenty. I gave an example. Same for us. We have a $10,000 a month dispensary. You can have a 6-figure firm with 1 client in cannabis. Maybe it takes you 3 or 4 or 5, but you do not need 100 clients. And this industry is growing explosively right now. So again, back to your question, education. You'll see if you join our program day 1, it's becoming a VIP, which is a valuable expert, an instructor, and a participant in the industry. That starts day 1. It never ends. I'm on year 6 every day. I spend the first hour getting more knowledge, reading, and it's not just cannabis accounting and tax. It may be USDA regulations or a new email about 199A or about insurance or POS systems or whatever it is. I'm increasing my education daily. And whether you join our program or not, you should as well. The secret to a great firm, pick a great niche. That's huge. If you pick the wrong niche, you're fighting a losing battle. Become a VIP, which is more than an expert. You want to be an expert, but you also want to instruct. You want to participate. If you can do those things and have the right tools to provide world-class service, you will be on your way to a very successful firm. Do DOPE CFO. So we have about 400 people in our program. Some of them do audits. So audit is a much higher level of a test service. I don't personally do audits. In my firm, we do have a couple students that do that. So Wildcats, please send me more information. We will do that. We'd love to have you. We've just actually updated the program to version 3. I just got a comment yesterday from someone who said version 3 was far away the best yet. So would love to have you in there. That said, that brings me to another point with this upgrade. We are pricing on October 21st. We're doing a live evergreen webinar, is going up pretty substantially for our program. So if you have any interest in this idea or building a business around this space, you ought to definitely consider it in the next couple of weeks. New Mexico CPA doesn't allow for cannabis accounting. So Christy, I'm not sure if you've talked to your state society there. Most states, so in New Mexico, medical cannabis, I'm pretty sure is legal. Most state CPA societies have addressed that it is okay to service a cannabis client, but definitely get in touch with your state board if you are a CPA. And then as long as they address it, then you can serve clients around the US. Another way you can get in quickly is start on the CBD hemp side. That's federally legal now. There's even more companies. It's growing quicker even than cannabis. I think there's 19,000 companies launched this year. You can start on those, learn everything. When cannabis goes federally legal, you're already up and running. But you very likely can serve it already. So I would just talk to your state board. Cherie is finishing BS in accounting. Obtain a CPA and go directly into this industry. Do you have, again, Cherie, we'll contact you about we don't have like a cost payment plan at this time. It will still be valuable later. I'm recommending, this is the same I told my niece, to get in now, because yes, it's definitely get a CPA or a master's. Any education you get is great. It may just be a QuickBooks certification or a Xero certification or whatever it is, education, yes. But I would not put a hold on the cannabis. I would start becoming a VIP if you can afford it. Get into our program today. You will have a huge head start. You can even start servicing clients while you're in college or school. As you go, it'll be way more valuable as opposed to stacking the education on top of each other and taking 6 years and then being way behind. I use the example of craft breweries. It's a great niche. I know someone where craft breweries are huge in Oregon, huge in Bend, Oregon. I know some people that have killed it in that niche, but right now it's too late. If you wanted to build that as your niche, it will be very, very hard to get in. But if you were, say, 10 years ago, got into craft breweries, you could have built a huge practice just around that niche. Sure, you started the degree after you found you guys. Yeah, degrees are always great. I'm a believer in that. And the cost on October 21st, so you can look at our website. The cost right now on our website is $5,000. If we do offer a discount, if we get on the phone with you, a 72-hour discount of $1,500, that's about to change and go away as well. So now is definitely the time to get in. The cost will be, I'm not sure how much higher, but sizably higher than that, October 21st. So I think we've hit all the questions. Well, thank you everybody, and hope this was informative. I'm not sure if I missed anything, but thanks for joining me.